Hello and welcome to Seeking Alpha Interviews. I'm Jane King at the NASDAQ in Times Square, and with me today, Bret Jensen, the founder of Biotech Forum and Insiders Forum, also a Seeking Alpha contributor. So welcome, Bret.
Good to be back, Jane.
Let's talk about biotech. It's been really fascinating since the election and even in February so far. What do you say?
Yeah, it really had a huge surge right after the election. It kind of fell out of the vanguard of the rally for a couple of months, but in February the indexes are going crazy. They're about 10%, and there's a few reasons for that. We've had a lot of tweets about astronomical drug pricing, but behind the scenes the president was meeting with the CEO and the pharma heads, pledging to go ahead and reform the FDA, streamline the drug process, since it costs an average of $2.5 billion in 15 years to develop a drug.
Okay, to bring it to market.
To bring it to market, and this includes all the failures you're going to have along the way. And I think kind of the deal was, we'll help you with the regulatory process and the tax reform, but you guys have to keep the price increases on existing drugs down to a reasonable level. Allergan and AbbVie CEOs have said, guys, you know, we got to keep in single digits, trying to self-regulate. You had Marathon that was in the news briefly. They are going to hike a existing drug that's been available in Europe for DMD that was costing about $1,000 here. It never got approved here, so they used the old trials, and they were going to charge $89,000. Oh
my goodness! I actually did see a headline on that.
So they pulled that. So I think you're going to see a lot more of that. Obviously, the second thing that's helping the biotech indices right now is the prospect for tax and regulatory reform. Anything can speed up the drug approval process, make it less costly, is good for the overall industry. And any kind of tax reform, which would have to include something around the overseas funds that are kind of stranded in these operations, because the tax rates here are much higher than they are the rest of G7. We're talking hundreds of billions of dollars. And if we get some sort of tax holiday, they can bring it home, make mergers and acquisitions, buy back stock, increase the dividends, put more money into R&D. And again, the deal is kind of bring it home, you keep growing your R&D jobs here and not overseas, and we're going to give you a better regulatory environment. But the big thing really keying the rise in biotech recently is a huge surge in M&A activity early this year. Last year, it was a very punk year after two record years in 2014, 2015. The Treasury Department in April derailed the $150 billion merger between Allergan and Pfizer. And ironically, these two companies, now that they're not going to merge together, have been buying all these little small caps. Pfizer bought Medivation last year in September for $13 billion, jumping over Sanofi to pay another $3 billion on that. You have Allergan making all sorts of these small acquisitions. They bought Zeltec Aesthetics earlier this week. Before that was LifeCell and another little small NASH concern. You had J&J buying the biggest pure play biotech company in Europe, which was privately held for $30 billion. You've had Takeda buy Arid Pharmaceuticals, another oncology concern, paying a 75% premium for $5.2 billion. And even VCA Antech, which is an animal health concern, was bought by privately held Mars. We know them for the M&Ms, but they actually make more money off their...
They have an animal science unit too.
Yeah, and they actually make more revenue off that now, and that's the latest in animal health. So you have a whole bunch of M&A, and it's almost starting to develop a little bit of a feeding frenzy type aspect, especially in the oncology space.
Well, that's what I was going to ask. Do you think that we have seen the bulk of the M&A activity already this year, or is there more to come?
I think we're going to have a very good year. I mean, we're even seeing rumors about Bristol Myers Squibb, which is another huge oncology concern. You know, you had the Street Insider reporting, you know, Pfizer and AstraZeneca and maybe even Gilead Sciences might be kicking the tires. That'd be over $100 billion acquisition. Now, I don't see that going right away, but I can see moving up where you have the 15, 20, $30 billion acquisitions, again, a whole bunch of small and mid caps as well.
Okay, so you mentioned a little bit about the drug prices, and it seems the deal perhaps made with pharma, and it's gotten a lot of publicity. Do you think that is calming down these huge increases that we've seen in some drugs?
Yeah, I think the industry is learning not to, you know, police the bad actors, and some of the bad actors have been taken out and shot. And the other thing that you're not going to hear so much about is that it's no longer election year. So there's no longer a reason to have a populist drug spending. And the one thing that most people don't understand is the headlines are never really the true story.
Right.
So I'll give you a perfect example. Biggest rollout in history, Sovaldi and Havani from Gilead Sciences came out in 2014. It's a cure for hepatitis C. The headline was $84,000 for a 12-week regimen or $1,000 a pill. Now, number one, that's a cure, so you're not paying maintenance, you're not paying for a potential liver transplant. And actually, once you include all the rebates and the discounts, the huge insurers and the government programs, again, you're talking less than $50,000 on average. So the headlines are really good for the politicians, but the drug prices actually are coming up much lower than what most people are reading in the headlines. And a lot of these drugs, like Sovaldi, actually save money in the long run.
Versus the disease.
Yeah, but the industry does have to get better as far as these egregious hikes, like what Valiant started all that. You cannot buy a company and have existed drugs and basically pump up the prices 500%.
Right.
That kind of behavior needs to be punished.
So let's talk about specific companies, either that have some promising treatments that we'll see some progress with this year, or some possible acquisition targets.
Okay, let's go with the latter, because last time I was here we talked about a company called Acadia Pharmaceuticals, ACAD, on the NASDAQ, and it's up about 35% since then. Definitely the buyout rumors have increased. Their drug called Nuplazid is the only approved treatment for psychosis in Parkinson's. Now, there's about 1 million Parkinson's patients in the US, and about 40% of them have psychosis. Now, they also have that drug in late stage testing for same types of symptoms for Alzheimer's and schizophrenia, obviously much bigger markets. Already hearing anecdotal evidence that the drug is being prescribed off-label. Just with Parkinson's is probably $1 billion a year drug. If you get the other two, you could be up to $3 billion. Lots of possible bidders in this. Obviously, I don't think it has as much upside when it was selling under 30 as now is at 40, but I could see it going for 45 or 50 in a buyout where only one drug giant is seriously interested in it. But if it gets into a bidding war with multiples, it could easily go 55 or 60. And since the Baker brothers, which is a noted healthcare investor that always pushes for a buyout, I just don't see that company still being a standalone by the end of the year. Actually, I'd be surprised if it's still around halfway through the year. Another company, a very simple buyout candidate, much smaller, is a company called Synergy Pharmaceuticals. SGYP, just over $1 billion market cap, sells for just under $6.50 a share. They just got their first drug approved called Trulance for chronic idiopathic constipation. Also got very good late test results for IBS-C, which is another GI indication. They're a faster acting compound compared to the market leader, which is Lisness, which does over $150 million of sales a quarter and is growing very rapidly. This would be a very easy acquisition for someone like Takeda, which is said they had $15 billion for acquisitions before they bought Area for 5.2, and they're very interested in expanding in gastrointestinal space. Probably $8.50 to $10.50 a share is probably a good buyout price. The last company I'll go ahead and talk about, going back to animal health, is a company called Aratana Therapeuticals, PETX. Now, this is by far the smallest of the three. It's about $250 million. Now, they had 3 drugs approved last year. Obviously, they go ahead and target the canines and our pets, and it's a very good space to be in because as we don't have as many kids, we're treating our pets like children, which means the pet spending has been going up regardless of recession, whether it's surgeries, whether it's foods. You know, I'm feeding my dog Chilean sea bass every now and again. I mean, it's ridiculous. But they had 3 drugs approved last year, and the stock rose really nicely. And then a week ago, or about 10 days ago now, they had one of those drugs is going to be postponed from rollout from the first quarter to the fourth quarter. Nothing to do with the drug. They're changing manufacturers. Now, they took about a $60 million market cap hit, but at most, this might delay sales $8 to $10 million. So it's a real good time to get back in there. It's a pure play Animal health concern, probably the most logical buyout candidate is Elanco, which is animal health, part of Eli Lilly from Indiana.
Yes, that's right. We got an Indiana theme going today.
Yes, we do. And it would be a very small buyout for them. But even as a standalone company, I really like this company.
Wow. Okay. Thank you so much, Bret, for sharing your thoughts with us and all your research. So very interesting stuff. And thank you as well for joining us on Seeking Alpha Interviews.